record on this computer. Now we are live. Great. Jill, how are you?
I'm doing good. How are you?
I'm doing very well. I'm excited that we got together. I'm excited to talk to you today. Like I said over the phone, I'm Sam. I'm with the Jaws Real Estate Group, and I'm a buyer's agent on our team. We do use a team model, and my role on the team is to help people like yourself. I end up working with mostly first-time home buyers, and my sole role is to help buyers find and purchase houses, whereas a lot of other agents that are just a solo agent working by themselves might be doing everything, listing houses, marketing houses, all that sort of stuff. I'm just here to help you out, and really I'm a consultant to you. And as a part of that consultancy and getting our process started, that's why the gentleman on the screen here, Evan Beach, is here with us. Evan is our team's preferred lender. He's with Equity Prime Mortgage, and we like to pull him in nice and early in the conversation to help answer any of your questions.
That's great. Not working with anyone, so that's awesome.
Fantastic. So what I'm going to do for you today, Jill, is I'm going to go through the whole process. I'm going to take you through the entire home buying process. Some things might be repetitive for you, right? You might know some things already. You might have heard some terms. We're going to talk about certain terminology. We're going to talk about the current market, right, in the way that it is. And, we spoke about this over the phone, that we're in an all-time frenzied market, for lack of a better word. And being on the buy side takes having the right team around you. So I'm going to share my screen right now. And if I'm talking about anything that you already know, or you're educated on that already, I know you're a first-time buyer, so you might not. But if it's something that you totally understand, just tell me, and I'll skip through it. But we will go through everything. So I'm going to share my screen here, and I'm going to pull Evan in to kind of take over once we get into the conversation about financing, about the mortgage, about appraisals, and all that sort of stuff that we will discuss. So I'm going to share my desktop. Can you see my screen, Jill?
I can.
Great. So let's get you guys out of the way on my screen. Cool. So you're purchasing a home. It's very exciting. It should be exciting, and it is exciting. And we're here to make that process successful and smooth and enjoyable for you, and also to protect you. And as a buyer, we have a fiduciary responsibility to you, which means we're here to help you buy a house, but we're also here to protect you and look out for your financial needs in this process, as it's a big purchase. So I'm going to start with kind of running through a bit of the terminology, again, that you might be aware of, you might have heard about these sort of things, but these are the things I'm going to talk about as we get into the process. So like the cost of buying a home, right? Like that we had a conversation about your price range and that sort of stuff. We're talking about the physical. What is it going to cost me on day 1 of the process, day 15 of the process, day 45 or day 60 at closing? What's the hard cost to you as a buyer, and why are you paying for those things, and what are you paying for? We generally talk about the hard costs that you'll have along the way are going to be your inspections and your appraisals. So as a buyer, you have a home inspection contingency. You will do a home inspection on any house that you get under contract and get into the process on. That's your first chance to bring in an inspector, really get an understanding of what condition the house is in and if there's any issues. And then as that's your first contingency, which means when I say the word contingency, I'm saying you've made an offer, they accepted your offer, you plan on purchasing that house, but in the contract, you have a contingency of a home inspection. So you're going to purchase it if you're satisfied with the home inspection, right? If you're not satisfied with the home inspection, we walk away. Or we'll try and negotiate, a credit or a repair, but then we walk away. So you'll bring in a home inspector. We can provide one for you if you don't already have. I generally say if you don't have like a friend and family, someone you really know who does it, don't go Googling for it. We've got some great people that we align with that we will recommend for you. That can generally cost, it says $300 to $550 here. There's a couple add-ons if you do a tank sweep, if you do a radon test, any sort of these things that you might do. That range, and depending on the size and age of the house, could get up into the $750 range. So that's going to be your first hard cost along the way. You will pay for that. So even if you don't purchase the house, that's not money you're getting back. You're essentially if you pay $600 for the home inspection and find out your $400,000 house is no good, you're spending $600 to not waste $400,000, right? So it's a cost that is, might hurt a little bit, but it's worth it to protect yourself. That's your first chance to kind of get your medical report of the house. You do that, we talk about it, and then you can negotiate with your seller, maybe a credit, maybe a repair, maybe it's a perfect report and you're happy. You move on past that step. The other one will be appraisals. I'm sure you've heard that term before. The appraisal, that's where the bank is coming in and doing their inspection of sorts and determining value, right? They're confirming that, okay, they're lending you $350,000 to buy this house for $400,000. They want to come and make sure that the house is worth $400,000 in their eyes. So they'll come and do an appraisal. That's a second hard cost. It's usually a little closer to $700. I need to update this sheet here. Closer to a $700 payment. This is all paid before closing. So that is the second cost that you'll have. Again, it's a contingency if the house appraises as you want it to, at or above purchase price, then you're good, you move forward. If it doesn't, there's a chance there to either the seller will reduce the cost, reduce the sale price to that appraised number. You guys can negotiate, maybe split the difference and meet in the middle, or the seller might say they don't want to adjust it, in which case this is your contingency. You are either happy, paying the cost, and Evan can talk about what that means to purchase an under appraised house, or you walk away. If you're not going to buy it, that's your second protection and your chance to move away. So those are two of your hard costs. Your down payment, when you're planning your full financials, your down payment does not get paid till the end of closing. You pay that at the closing table. You will pay an initial deposit out of that down payment within 3 to 5 days of getting under contract. But that is a number that we work on when we make the offer. Typically, down payments, the lowest you can go is 0 technically with some programs, VA programs, but conventional loan, the lowest will be 3%. And, people try and be in the 10, 15 to 20% range when they can.
Okay.
And then your closing costs. Those are, you see their lender fees, transaction fees, homeowners insurance, prepaid taxes. Generally a safe-ish way to estimate that is 3% of your purchase price. But again, when you're working with a lender who's involved in the process from the beginning, like Evan is with our clients, you'll be able to get a pretty good range of that number. You'll be provided an estimate on it based on your purchase price.
Okay.
So these are your costs. This is like what it's going to cost you to buy a house. And as you hone in on your purchase price, you and your lender can hone in on what an estimate of that final cost might be, so you're not shocked at the closing table. Any questions there before I move on?
Maybe Evan will get into it later, but I do have a little bit of questions on the appraisal. I've heard of it, but I'm also hearing that we're in a different market right now, and so people are doing some things differently with the appraisals, and that you may have to have extra money in case, so I do want to maybe get into that a little.
Yeah, absolutely. That's once we kick it over to Evan, we'll make sure that he addresses that for you, because it is, you're smart to ask the question. It is happening in the market these days, and Evan is the guy to explain it to you for sure.
Thank you.
So I'm going to move on. We'll circle back and make sure we get that. Just some general buying information. State of New Jersey, you don't pay me. You don't pay a buyer's agent. There's no fee there. The seller pays their agent, who then in turn pays my brokerage. So you might be wondering, like, what are the advantages? Why am I working with a buyer's agent, right? Some people think like, oh, I should go to the listing agent, call the number on the sign. The listing agent actually already has, like, as we speak, this house that's on the market, the listing agent already has a signed contract with their seller, which means their fiduciary responsibility is not to you, it's for their seller, right? They want to get the seller the most out of their house. They want to get them the best purchase price. They're not also, so if they're also going to claim to be representing you as well, they're actually, it's called dual disclosed agency. They'd be representing both sides of the transaction. And if you think of it in the case, like if you were suing somebody, if you got hit by a car or something like that, you were going to court, would you want to have the same attorney who was representing your accuser or the defendant or the prosecution side?
No,
No, you wouldn't.
it that way. Mm-hmm.
Right, you wouldn't want to have the same person looking out for both of you. You want your own representation, and that in this case would be a dedicated buyer's agent, like myself, who's going to bat for you and trying to get you the best price for the house. So calling the sign, calling the number on the sign, trying to get to the listing agent is actually counterproductive to get to what you want. That agent cares about selling that house, not about helping you buy that house. The other things that come up are new construction and foreclosed and bank-owned properties, also for sale by owner, should be in here as well. Those are all, they are options. They are, if they fall into your range and your criteria, they're certainly good things to explore. It's kind of the same idea. You don't want to walk into a new construction office like the trailer that's always out there on the dirt lot. And once you go in there, remember that leasing agent that's aligned with that builder or that developer is aligned with them, not with you, right? So it's the same conversation. You want to have your own representation. Important to know, once you, if you go see it on a Sunday, you walk into that office and you say hello to them, I'm interested in buying a house. And the next day you say, hey, I'm actually working with Sam. He's my buyer's agent. They won't work with me. So your agent needs to be there at first introduction, or else you've sort of given up your right to have us help you. So it's a simple thing. Same as if you see a new house on the market. Oh, there's a new development going up down the street from me. Could you see if they have any open units, right? And then it's the same conversation. Same conversation from there. I don't think foreclosure and bank-owned properties are going to be on our radar specifically, but same story there. We get a little bit less information from an agent because, quite frankly, when the bank lists those properties in the MLS, the agent doesn't actually know much about the house. So it's a bit of a trickier process, but they can be opportunities if it's something that you're looking for. It usually isn't a quick process. So knowing that your timeline is 30 to 60 days, maybe 90 days at the most, we'll probably gear away from that in this situation.
Okay.
All right, I'm going to jump to the next page here. So this is process. This is very similar to this. You can still see my screen, correct?
Yes.
All right, I'm going to send you this flyer. This is our brokerage put this together, and I just think it's a really easy roadmap to follow. It's great for you to have, like, print it out and put it on your fridge, right? And you can circle, like, where am I in this process? Because it gets to the point when you're like, did we do the appraisal already, or like, what's next? And obviously I'm there to consult you and tell you what's next and prepare you for what's coming. But this is just like a really good visual to kind of have your head wrapped around. And where you are right now is right here at the top, this blue section. You're meeting with and establishing a relationship with someone who's going to represent you and someone who's going to help you purchase and buy. So I'll provide that with you so you have it there. And the same kind of idea here. This map will take you through the whole process. And as the agent along the way, I'm really a consultant. Questions come up, I'm the guy who's going to get you the answer. If I don't have the answer, I'll tell you that I don't have the answer, but I'm going to get you the answer. Generally, if I don't know it, I have a team that is going to help me out and help you out. That's Evan, that's our attorney, that's our broker. All those people that I'm aligned with are going to be able to help you out. And my job is just to get you information and get you answers. You'll see here, like, loan qualification is step 2 on here. We kind of put these into the same step 1 conversation. That's why Evan's on the call here. You asked questions about appraisals. You ask questions, beforehand about like this market and what's going on here. And I know a lot of people, they know Rocket Mortgage or they know Wells Fargo or whatever the situation is. So we just find that you have the best advantage of winning in this super competitive market if you have if you're aligned with a lender who's going to get you quick answers, because same with a quick agent, you need quick answers on the financing side. So Evan, if you want to jump in and you see like loan qualifications here where Jill's, just kind of right before the pre-qualification stage. If you can give her a little bit about what it is that you do and how you guys operate together, and answer maybe her question about the appraisals.
Yeah, of course. Happy to help. Nice to virtually meet you, Jill. But yeah, I know Sam touched on a bunch of info there already. I was getting into kind of the blanket idea of the home buying process. Really, from a finance standpoint, people come to me and ask me, when should I get my pre-approval done? And my answer is always yesterday. I mean, you can't start this stuff early enough, because unless you have, $500,000 lying around somewhere that you're going to go buy a house in cash, you're going to have some type of financing that's necessary, some type of mortgage that's necessary. And what we want to do up front too is we really want to figure out not only what you can afford, but what you want to afford. And what I mean by that is I can come back to you and say, hey, Jill, we have you pre-approved and you're ready to go. We have you pre-approved for $1 million mortgage. I would hazard a guess that you're probably not going to like the payment on a $1 million mortgage. So we really want to drill in and see what your goals are for the properties that you're looking at. Number one, is this a forever home? Are you going to be here for 20 years? Is this a starter home? Are you looking to be here for 3 to 5 years? And that'll allow us to kind of detail and plan out a plan for you from a finance end, and really drill into, okay, we don't want to spend more than this per month. Okay, all right, so what do you want to spend up front? Because the biggest questions with any home buying that you're doing are going to be, A, what's it going to cost me now? And Sam touched on that from a down payment standpoint and a closing cost standpoint. So you're going to have those kind of upfront costs, if you will, with your down payment and estimated closing costs. That's the first thing that you're going to want to figure out. And then, B is always going to be, okay, once I'm in the property, what's going to cost me once my mortgage bill arrives every month? So those are the two things that we're going to focus on in any transaction, because those are the two things that are going to matter. So we really want to get you in a position where we can get to the point of having it completely pre-approved, and I'll touch on what our pre-approval process would be. But so you're in a position where you can make an educated financial decision when you're looking at properties. You're going to know an analysis of, once we get to that point, you can send me each and every property that you're looking at, and I can do a breakdown and say, hey, Joe, all right, you want 123 Main Street, you want to buy it for $400,000. If that's the number that gets accepted, here's where you are from you're going to need X amount right now with your down payment and with your closing costs, and then your monthly payment is going to be Y with your principal, interest, tax, and insurance. So that's really why we need to be involved in all of these things up front, because I see it happen all the time where, especially first-time home buyers, will just, Zillow is a dangerous game, because as I'm sure you can start looking around on Zillow and say, oh, this is exactly what we want. This is a perfect home for us in the right neighborhood. It checks all the boxes from, bedrooms, bathrooms, everything. Has a pool, has everything we want. And then you see the sticker price of it, and it's like, oh, well, yeah, it looks like we can afford it. I think we can. And you try to talk yourself into, potentially overbuying something. So we really want to curb that up front. So very important for us to be involved in the initial phases with this too, because it goes hand in hand with the property that you're looking to buy. And what we do basically that's different at Equity Prime Mortgage, I should touch on the fact that I do work for Equity Prime Mortgage. I've been in the business for a very long time, over 15 years now, so I know it backwards and forwards. So I work with a lot of first-time home buyers. So we're very good at holding your hand throughout the process, answering any questions that you have. You will have a ton of questions. There's no such thing as dumb questions in this process, because if you've never done it before, a lot of it can seem like Greek to you. So that's what I'm here for, to answer questions and make you feel comfortable as you move along. But what we do from a pre-approval standpoint that differs from a lot of other lending institutions is we do a fully underwritten pre-approval. So if you were to go and apply for a mortgage, say with your local bank, whoever you do your checking and savings with, if you walked in there and said, hey, I need a mortgage, what do I do? They're most likely going to give you an application. They'll say, hey, fill this out, get this back to us, and we also need a pay stub or a W-2. They'll look at that and they'll say, all right, looks like it checks out. Here you go. Here's a pre-qualification letter. Let us know when you're under contract. And they're not going to underwrite the file until you actually get under contract, for the sheer reason that they are a lending institution that is a depository institution. Their bread and butter is their checking, savings, money markets, things like that. Mortgages are typically an annex of their business, and they don't want to spend someone's time underwriting a file until they know it's actually going to be under contract. The problem with that is that all the issues arise in underwriting. So any red flags, speed bumps are going to pop up once that file gets into underwriting. So the issue that you have a lot, especially with first-time home buyers, that may not have provided the correct information in an application or something like that. We have it happen all the time, and I'm sure Sam will agree with me 100%, is that it happens frequently when somebody gets under contract and a deal may fall apart because the lender, once they start underwriting it, found a problem. So what we do is we flip that the other way. We actually underwrite the file up front. We do a fully underwritten pre-approval, which is advantageous, especially in this market, for a few reasons. First being, it's going to be an easier process once you actually do get under contract, because we know we have it fully underwritten already, and it should be a smooth process outside of anything catastrophic happening like job loss or something along those lines. We know we have it fully underwritten and ready to go. It's more so just going through the motions once we get under contract. Second reason being, I mentioned working up numbers on different properties. Once we have a fully underwritten pre-approval, we can then go and say, all right, we're going to go, it makes sense for you to go with this loan program. So we now have a direction. Okay, we're going to go with this loan program. Then it's just a matter of inputting the property that you're looking at, and we can accurately work up numbers up front. Third and most important in this marketplace, and Sam touched on it, is the fact that it's a very competitive, very much a seller's market right now. So the strength and the validity of your pre-approval has never been more important than it is right now. I get calls on a daily basis from sellers agents asking me about pre-approval letters that I've provided for my clients, because of the fact that they have a dozen offers on a property, and if they think that they may go with your bid and your offer, they want to know that it's going to close and they didn't kick 11 other offers out. So that's a very important part of why we do this up front too, is that I can then go to bat for you once we have this completely pre-approved and say, yeah, I went through everything with Jill and her family. We have asset proof, we have credit, we have income documentation, we have it fully underwritten, we have findings run. This thing is rock solid. The only reason, this is the next best thing to a cash offer. So it goes a long way. And most of the time when I'm talking to sellers agents, my clients are winning the bid on that property because I'm able to go to bat for you and sell your case to them. So that's probably the most important reason why we do this up front. And we're able to do it up front for the sheer fact that we are an institution that is strictly deals with residential financing. So we do not dabble in checking, savings, money markets, commercial lending, anything like that. And we're also a referral-based business. So much like Sam and everybody else at the Joe Oz team, I work with a lot of different realtors, CPAs, financial advisors that refer me business constantly because we have a great track record of doing that. So we're able to keep costs down in those areas and put it into our processes up front to do these upfront underwrites. Whereas, because it is time, money, manpower for us to do these things up front for each and every buyer that we're talking to, but we've found that over the last decade plus of doing this, it's the best way to handle the business, and it's really come to the forefront in this market because it's such a crazy seller's market right now, which I'm sure Sam can allude to, having many offers on many properties.
And I can't tell you, Jill. Evan said it. When I make my offers, when we send in the formal offer via email, which is what we do, I'm putting it right in there in my description I'm talking about my clients and who they are, and here's the terms and everything, and I'm making it very clear. My client is working with our preferred lender. They've gone through a fully underwritten pre-approval process, and if you or even your seller would like to talk to our mortgage lender, I'm happy to provide his contact, and I'm putting that information right in there. And like Evan said, like if there's any concern, which, if there's any reason for concern, and then they get on the phone with Evan, we're winning those deals. And, when there's a multiple offer situation, being able to offer that is, the guy at Rocket Mortgage isn't going to pick up the phone when the listing agent calls to ask questions about the buyer, right? So
it's done very safe. So I like that.
Yeah.
Yeah.
Yeah, and it's just another person going, on your team and going about for you, which Evan's hit a couple home runs for us recently. So.
Yeah, and again, without I could go on and on about the mortgage industry and other things and other facets of it, but that is all typically why it's so important to have that initial upfront consultation with me to have a rundown of what you're trying to accomplish and just have a game plan and have your finance ducks in a row. Because again, unless you have a huge lump sum of money and you're buying a place cash, you got to have this stuff in order in this marketplace to try to win a property. So
yeah.
I guess the other thing I could touch on, Jill, you had a question regarding appraisals, correct?
And the gaps that could possibly happen in this market.
Yes. So what we're seeing in the market right now, especially in our kind of little bubble here in Monmouth and North Ocean County, is the fact that we have very high appreciation rate in a short period of time. I mean, we had properties from basically this time last year, it's middle of April, from middle of April last year till now, we saw 15-20% appreciation, which is outrageous when you think about it and the dollars that means. So, obviously every $100,000 of the value of your property went up anywhere from 15 to 20 grand. So multiply that by average pricing in Monmouth County of 400, 500. It's a crazy amount of appreciation. And that's trickled into, obviously, when home sales happen, the appraisals are having a tricky time keeping up because, the house that across the street that just sold, when I say just sold 2 or 3 months ago, may have already appreciated, but the appraisal can't keep up with that quick enough. So long story short, we're seeing appraisals come in light. So let's say you're going to buy a house for $400,000. The appraisal may come in for $380 because of the fact that the appraisal company just can't find comps that are of that square footage, of that condition, everything else that goes into comping a value of a home, quick enough. So while that property most likely is worth $400,000 that you're buying, there's a chance that the appraisal may come in a little bit light. So when that happens, you have a couple things. First being, like, again, let's just use that example of you're buying a place for $400,000, the appraisal comes in at $380,000. We now have a $20,000 gap that we have to deal with because we, the lender, are only going to lend based upon that $380,000 value now, because that's, to us, that is now what the house is worth because there's been an official fair market appraisal done. That's to the dollar. So that's what we have to now lend on. So we have a $20,000 gap that we now have to deal with. And you can go about it a couple different ways. First being, you can go back to the seller and say, hey, we agreed upon a sales price of $400,000. It's worth $380,000. Here's the appraisal. What are we going to do here? You can ask the seller and negotiate with the seller, hey, I dropped this price to $380,000, which, spoiler alert, they're probably not doing that in this marketplace. But
not very common right now.
Not very common. But you can go back and say, hey, we have a $20,000 gap here. Why don't we split the difference? Let's drop it to $390,000 and we'll bring an extra 10 grand to closing. Again, probably not going to happen in the marketplace right now, but that's how it used to be all the way back in early 2020. So the third option would be you have to now bring that gap to closing if you want to continue to buy the property. So you now have to bring an additional, not $20,000 to the dollar, but it'll probably be more like 19 and change or something like that, that we now have to deal with. So you would essentially be bringing that extra funds to closing. Now, other options would be, it's going to be dependent upon how much money you're putting down on the property to begin with. So the larger money that you're putting down, the larger your down payment. If you're putting down 15, 20% or more, something like that, we can then shift this around where if you're, let's say you're putting down 20%, we can now just shift it and say, all right, well, we have a $20,000 gap that we need to come up with. We can just basically have you put down less money and put that difference to the appraisal gap. So we can say, all right, we're going to put down 17% instead of 20 or whatever that math looks like. And then that money is now just going to cover the appraisal gap. Only difference is you're now going to be technically borrowing more money. So your payment's going to go up a little bit because now we essentially lent you another $20,000. So that's the other option that you have to go about, appraisal gaps or appraisals coming in light.
Mm-hmm.
Does that make
sense?
My
only question there is that, are you able to adjust these things? Like if I make an offer saying that I'm putting this amount down, that can be adjusted later to make up for my gap if I have it.
Correct. Yes.
Yeah.
We can always adjust. You can typically always adjust how much money you're putting down. It's a gray area when you're purchasing homes because somebody can come in and say, hey, yeah, I'm putting down 50%. The seller is never going to know that they're not putting down 50%. They could turn around and put down 20% if they want to. And the seller is no wiser from it. I mean, as long as the seller's getting the money, it doesn't matter how much money you're putting down at all. As long as that gets to the closing table and the seller's getting that 400 that they're anticipating, that's all that matters. So we can always adjust the down payments as you move forward. So like I said, if you're putting down 20 or you're putting down 15% and the appraisal comes in light, we can simply have you put down less money. Again, assuming that there's no other qualification issues. If we have a very high debt to income ratio, it can get a little tricky because we can't go over certain thresholds. But for the most part, any of these circumstances that I've run into in the last, probably call it 8-9 months now, we've been able to rectify them. I haven't really, again, knock on wood, I haven't really lost any transactions due to appraisals coming in light as of yet.
Right.
Now, that's not to say that there won't be more severe issues in the future of coming in, $50,000, $60,000 light, and then you're talking about a little bit of a different ballgame. But for the most part, if appraisals are coming in that, $10,000, $20,000, $30,000 range, it's workable. But again, all the more reason why you want to know that going in up front and to have a game plan. Hey, if this appraisal comes in light, here's an option that we can do. So it's very important to know that going in up front, so you're not scrambling. If the appraisal comes in light, you're not figuring out a way like, oh, I got to come up with $20,000. Let me go hit my parents up, see if they can lend me $20,000. It's not how you want to handle it. You want to have a contingency for that if that's the case. So that's really why we all the more reason to have this done up front.
Makes sense. Thank you.
You got it.
Yeah, and having this upfront plan in place, Jill, is really important. It's like there's no reason to shy away from the conversation, right? The market is what it is right now. We've already spoken about this. We might look at a house that's listed at $385, and we might know that there's 4 other offers on it, and we might know that you need to go to $400 to get it. Now, if you're in love with the place and that financially from your conversations with Evan, that purchase number makes sense to you, you just need to know, well, what's going to happen? What can I commit to financially in the upfront that's going to help me win this house and get the house that I want, right? Knowing that beforehand lets you make the decision beforehand, as opposed to finding out down the line that oh no, it's $10,000 light. Like, what do I do now? I can't do it. Now we've wasted 3 weeks of everybody's time. So as part of this consultation, right, it's just we're addressing the current issues and the current status of the market, and being a buyer, that is a conversation that will come up. So it's good that we've had it in the upfront. That's the majority of my my story here. That's the process from start to more or less from start to acceptance of an offer to getting under contract is the term. You'll see escrow here. Someone says they're in escrow or they're pending or they're under contract. Zillow will say contingent. They're all the same thing. It means the house has an accepted offer, or you have gotten an offer accepted and you are in the process of purchasing. Obviously, you move through all these other stages in the process here, right? We can connect you with a homeowner's insurance rep. You can also go through, your Geico or whoever you use for your car insurance, that sort of stuff. And your lender and your real estate attorney and your agent are your team, and they kind of guide you through every step of this process. I want to respect your time here and make sure that I did say we try and get done in 45 minutes. This is just we talked about a lot of this already, but the sort of things that you should plan to get from me and my team and what you can ask for, right? Like market reports on the neighborhoods that you're looking at. I'm able to see and share what percentage of the home price is up in Tinton Falls or Eatontown or whatever neighborhood that it is you're looking at. Once we go and see a house, right? And we'll have our buying criteria conversation after this, and you'll explain to me. We'll hone in on how many bedrooms, what neighborhood, do you need a garage, that sort of stuff, because those are, I'm sure, excited to talk about that. We'll talk about all that, and then we go see a house, and from there, it's I can help you. You'll have questions about the value of the house. Is the price right? Like, how do we put together an offer? All those things it just comes down to a conversation, and we help you through that every step of the way. What our team also does is we're built as a team. We've got multiple people working on different facets of the real estate business. We have people who will target in. If you want to buy this type of house in this type of neighborhood, we have people who are going to research and prospect and look for off-market opportunities in those neighborhoods. If we can find you an off-market opportunity that doesn't have thousands of other people on Zillow looking at it, which that would be a homeowner who would entertain an offer, maybe would want to sell but hasn't listed their house right now, we're going to present that opportunity to you, and it's a chance to kind of circumvent the competition. So just another thing that we add and what we do, and like Evan said, we work on a referral type of business. So we have our allied resources who add value to us and add value to you, and we find that it works well that way. So if you have any questions about anything that we discussed?
No, I don't right now. Everything sounds great. I love that you guys work as a team, and I just feel, again, like I would be very safe, like you would be working for me.
That's great. That's what we want. We want you to feel that way. And I don't know if I said it yet, and Evan kind of alluded to it a little bit in the sense of getting started early for all of our potential clients. Our timeline's your timeline. We're not the kind of people, I'm not the kind of agent to be, let's go see this, let's go see this. Like, you should buy this one, right? Like, I'm going to present you with houses and opportunities that fit what I know you're looking for. It's really, you tell me, it's kind of a reverse of what people think. You see something that you like, we're going to go take a look at it. You're ready to move. We move. You want to put it off a month, we put it off a month, right? So we don't like to bring any pressure to an already pressurized situation. With that, I'm going to let Evan jump off here, and I want to thank you for being on again, Evan. Jill and I will hang out and we'll discuss our actual buying criteria, and we'll put together your market search. And then the next steps from here would be Jill will have that conversation. So we'll stay on and talk about that, and then we'll set up a time for you and Evan to connect, and Evan will get you a mortgage application and get you started in that pre-approval process. That sounds good to you, Jill?
That sounds great.
Great. Evan, thank you.
Absolutely. Nice to meet you, Jill.
You too.
All right, I'll connect you guys after. Take care, Evan.
Thank you.
And cut. Good job, guys. I'm going to stop share and